Hello, everybody. When I say everybody, I mean just me, because I'm the only one that watches this crap. Wanted to do a recap or just a sequence, going over a sequence here, and then yeah, just this is a failed breakout sequence. The context is we are opening. You can see right here at the edge of value. We've got one time framing for 4 days in a row now. 1, 2, 3, and 4. This is the overnight session. So we're sort of prime for a liquidation break. And we got a lot of short-term holders right here that are long, that are itching to take profit as soon as we start to see, any sign of a reversal. And us opening up at the edge of balance right here, we should anticipate a breakout. If we do see a breakout, understand that this is going to be all-time high territory, and yeah. So let's see what happens. I'm going to go down to the more granular version of market profile here, and let's just take a look. Playing at 30 times speed. So you can see here right at the open, just a couple minutes in, and we're already swapping around the open price. That by itself gives us a lower confidence in just a direction in general. If we had high confidence from the open, we would see price shoot up and pretty much never look back. The fact that we had chopping around that means that we've just got low confidence in general. So that's a tally in the failed breakout column. And also the fact that, shoot, look at this. We're coming right back down to this area, and right here is where I believe I took a trade. Right here. So the logic behind that is okay. We opened up right at the edge of balance. We tried to break out, and we couldn't. If I take a short position right here, that is just a really good risk-reward location. And the idea is just this is going to be a failed breakout attempt. And what happens with the development of the market profile during the day or early in the day will tell me if how likely that is going to be to follow through. So I'm going to speed up to 60 here and just let you know what I saw. That was basically the reason to take this short. We're at all-time high territory. The last couple of days we're one time framing higher. And then also we see just a few pieces of market generated information letting us know that a lot of this is likely shorter term traders. Some things like this prior day low was pretty much the settlement of the prior day before that. Just things like that where you see this point of control, this ended up being the low of day for the day after. So you just, with that open right here, this being choppy and not picking a direction, I just think we have higher odds of some type of mean reversion day, or at least just to get in and take some risk to find out. So I'm going to hit play. We'll see what happens. So you can see here I took that trade, A period, opening up. I'm going to go to 120 times speed, and we'll just watch this play out. So we're seeing some nice continuation. What we're wanting to see, if we are going to have a trend day or just an aggressive, liquidation day, people locking in profits, is you don't want to see the, say, B period. We didn't come back to half of A period right here. That's good. That's a good sign. C period, we are rallying off of the settlement and point of control level. So that just means this rally in general is going to be weaker, but it doesn't mean it can't continue to go. And you can see here, we're really opening up. C period came back to half back of B period, D period half back of C, and then D period just kind of taking off. And I believe I lock in one of my profits right here. Yeah, just after a really big emotional move like that, just lock in a contract. If we're, keep in mind we're still in an uptrend. So if I'm going to short, just understand that carries less probability just inherently because the overall trend is up. But that doesn't mean you should, get out of the trade right away. Just simply keep that in mind. See here, I locked in one contract. Price is, still in D period. Let's see what happens in C or E period. E period opening up as well. I believe I locked in another contract right here. The reason being that we were coming further than half back on D period, but that was inside of D period. In hindsight, maybe a little bit early. The fact that we were one time framing down was pretty substantial, but I just thought, it was safer to realize a profit right there. And if that's not a good idea, then I'll find that out in my data. But I have a sneaky suspicion that, this is going to be a good place under these circumstances to lock in a profit around this area. So let's just see how the rest of the day unfolds. E period coming down quite a bit. And this is a lot of expansion. Let's hop on over to our higher time frame profile. I mean, we took out one time framing in that day, this day, and we're attempting to do it on this day. That'd be the second, but we took out one time framing on 2 days so far. Value is still higher, but as we continue to build volume and spend time down here, value will get dragged down. You can see that happen right there. Point of control is also already towards the bottom end. And at this point, we just see low probability of price moving back up just because the point of control and the value was dragged down. And then this is the way the rest of the day played out. So I locked in my last contract right here. The reason being is we were coming back into E period pretty deep, and I just felt like this drop right here was very emotional and was likely not going to continue, or much less odds of continuing. So I locked in the rest, and the rest of the day played out around my last contract. We've got some poor lows created here, created in G&H and ENF. You've got a weak high right here at prior day low, but just the fact that value got dragged down, and then we have the point of control that got dragged down too. And after these two big emotional moves, not to mention, this is another aspect. Look at this. We've got pretty much, at least 3 distributions here, if not 4. 1, 2, 3, 4. And it's very unlikely to have more than 2 in a given day. I'll give you this is probably 1. We've got some single prints right here, but this, you can count that as 1. So price just continuing to build value down here. We found some two-way trading, and there likely was not going to be much more of a move on a day like this. So anyway, that's the biggest thing here. Biggest takeaway was trying to get a good location. If price was not going to break out, this would have been a really good place to take advantage of that. And we simply just rode the situation down, letting us know how likely continuation was going to be based on the one time framing and how far back into the prior period, say C period got into B, D period got into C, and so on. So don't miss that trade again. Again, failed breakout usually means we're going to traverse the value area. The context of a day like this is that we were one time framing up for 4 days, so a lot of short-term traders itching to lock in profit. Thanks.